Hey everybody, so welcome to the WIRA market update. It is Friday, Aloha Friday. So look, we're having trouble connecting to YouTube Live, so we'll do today's show the old-fashioned way, okay? We're just going to record it and put it up there. It was an exciting day today, right? We got that close over that 28.15, solid close. It was a good day despite kind of an up and down news day. The market held strong. You can see, this is what we've been talking about, and we've plotted it out pretty much to the T so far. When we had that big sell down in December, we were talking about it here. Don't sell your stocks. Don't liquidate. Everybody on CNBC is telling you sell everything, blah, blah, blah. No. There was a bottom to this, and we waited and we waited, and we found the bottom on December 24th, right? And we talked about it that day. We were absolutely sure, especially with this big reversal bar, that they was true. And then so we started charting out a plot or plotting out our channel here, and it played true. And as long as we stayed in this channel, we knew we were going to accelerate quickly. The markets weren't as bad a shape as people like to say. You're not hearing the same old talk, right? It's only 2 months later. You're not hearing recession talk. You're not hearing all this crazy talk that was filling the airways. It was very irresponsible, and it probably cost a lot of you a lot of money. We used this opportunity. We bought GE in the $7. We bought Apple in the 150s. And that's just for our core portfolios, all of our passive and organic stocks, which we love. We don't talk about those on the show, but if you're a member, you know about them. We got a bunch of those cheap. We firmed up our growth part of our portfolio, and we started rocking the options. We hit 5 in a row, 100+ winners in there. But we knew, and we've talked about this the last couple of weeks, it was going to be a challenge to get over that 28.15, and it was. We had a triple top going back here, a lot of supply, and it was. You can see it. We came up to it. We actually breached that 2800 a little bit, came back down, and finally got over it yesterday. And we got another confirmation close today. So look, the markets are in swing right now. You can bite into CNBC, you can bite into all this nonsense you're seeing on TV, but the fact is the markets are now where they were when the sell-off started. So 2 months later, you could have done nothing and you would have been okay. We had some action with some of our stocks. Our CLDR, we had a bad earnings report. So we got kind of beat up a little bit there. You see that little gap down there from the 14s down to the, high 11s. Did we panic? Nah. We love this stock, and we like this stock going forward. And we knew the earnings growth was going to be the story with this. That's why we went all the way out to next January on those contracts. So the contracts have lost a little value on those, but what we did was we stepped back, right? We analyzed, we determined the bottom, we determined where it should stop falling, and it looks like it has. And now we'll add a layer. We've got these calls at a higher level all the way up to January. We had a little bump in the road, so we're adjusting. We're looking at the $12 calls for summer, and guess what? Those things are cheap. So we're probably going to double layer this, and we'll double dip on it. We would have liked to have a better earnings reaction, but we got, it is what it is. So you got to live with what you're dealt. And you can see a lot of the momentum really came out of the stock. It's an earnings story stock. So we're going to stick with it. We like the company and we like the way things are going. The revenue is good, and there were good reasons for that loss, that extended loss, in some restructuring and stuff like that. So sometimes you got to weather a little volatility on these longer plays. So we'll stick with that. Oil, we're right around that $17 range. You know how we're playing this oil play. We're out to the end of summer on this one, and we're just outside the money. So these are actually pretty much even right now. We're just in this tail here, and we'll let it work itself out. You can see we breached that a little bit a couple days ago, but that was on that little that long week last week where there was a lot of selling, malicious selling. You can see it's just stuck in that channel, and we'll sit on it for a little while. Spot oil is back up in the 58s. You look at it a month ago, it was in the low 50s. Now we're in the high 50s. We're pushing towards that $60 point. Be patient with your trades. Be a little patient with your trades, okay? And that's what we're doing. XRT, our retail play, got a little beat up. But again, when you look at it technically, we're still just in this channel. And after a little bit of momentum, it got caught in last week's selling a little bit, but it's just kind of fluxing. We bought this right after that bad report. And we bought it out a few months and close to the money. We're not that far from the money. We're only a couple bucks out of the money on this. So we'll give it a little time to work. It needs to work through this green patch here, and it's building quite the tail, and we're going to stick with that, okay? AKS, down 2 cents today. This thing is just doing what a lot of stocks are doing right now, especially stocks that are associated with the trade deal, right? We get a little good trade news, we get a little bad trade news, and it kind of just in between does things to this stock. Look, this stock, we have $5 calls all the way out to January. Those things are just about break even right now. We have $3 calls out to summer, and those are already starting to look green. So this play is sizing up to be a huge one. Again, be patient with your trades. You're going to have good days. You're going to have bad days. You want to make sure that you're always analyzing and stuff like that. So we love the way we're set up going forward. GE, we ended up losing on that trade. We've been talking about that the last few days. Those options, we had those $11, $12 calls. We let them die in their boots today. We couldn't even get out of them. There was just no interest in them. So we had to take the loss on those. But guess what? We also own GE now at about $7.70. So we'll keep an eye on GE because there's more to play in there. It's basing around that $10 level, and we're liking it. It just got a little beat up there in that long week. And it was a little bit too much for it to overcome. But you can see it's still trading that little channel there on that tail. And that's, in our eyes, that's about the breakout range. If this bad boy can get back up over $11, it should have a free run to about or if it can get into that mid tens, it should have a free run up to about $11. Like I said, we picked up some shares. We like the stock. It's still a dividend bearing stock. The best part of this story is still ahead, and we can be patient with it. So that's really the quote of the day, right? Is patience. The old Warren Buffett thing, right? The stock market is a vehicle to transfer wealth from the impatient to the patient. Are you being impatient with your trades? We're not. We lost on that Twitter trade and we lost on that GE trade, and that's okay because, like I said, we just came off winning 5 in a row over 100%. The odds were probably against us a little bit on this ones, but we're loving the way we're set up going into summer. And in the meantime, in our live room and stuff, our members will tell you, we tapped out. We did about a 30-40% overnight gain on Boeing. We made another 80% on a NVIDIA trade during the week, little short-term trades in our live room. So, and we did some good work on the rest of our portfolio. Ask yourself, if you have a portfolio and you're putting almost all your portfolio into all your option trades, you're probably losing money quickly. That's a recipe for disaster, even for a good options trader. You have to have a portion of your portfolio that works for you in a different manner. Passive growth with organic stocks like monthly dividend pairs, things like that, core plays. When opportunities like December happen, what were you doing in December? Well, like I said, we put Apple in our portfolio at about 158. We put GE in our portfolio at like $7. We put Snap in our portfolio at under 6 or around 6. Look at Snap today. It had a huge day. It was up over $11. That's a double. That's a double right there, just from being patient and just from being logical. So again, portfolios are not made in one day, but they can be killed in one trade. So you got to ask yourself, what are you doing with the rest of your portfolio? A certain percentage of your portfolio, you want an accelerated growth, like option plays and stuff. But you want to have a beast in there that's going to protect you in all markets. You hear these people say this all the time. I make money going up, I make money going down. It doesn't mean they're just willy-nilly going short, going long, going short, going long. They have mechanisms in their portfolio, like our members do, which protect them when the market goes down. So you see like what happened in December. We were able to just step back. Yeah, we lost a few trades that we were already in, but we were able to recover super quickly and get ourselves some real cheap, good stock. Now we'll see what how next week brings, gang. We've got a Fed meeting next week, and it looks like we're getting a little more momentum on this trade deal and stuff like that. And the presidential cycle is starting to kick up. We got more candidates on the Democrat side. It's starting to look like the last Republican primary, right? It's kind of fun and stuff. But look, it's Friday. It's Aloha Friday. We call it Aloha Friday over here in Hawaii. And after putting in a long week where we worked our tails off to build our wealth, we're going to go enjoy the weekend, and we suggest you do too. Turn off the news. Turn off the Twitter, turn off the social media, and go out and enjoy some sunshine and stuff. Of course, unless you're in the Midwest, then you might want to put on an extra coat. But look, gang, we're getting what we expected from this market. We charted it, we called it, and now we're going to see if we get a little follow through, maybe a run towards that 29.41 level, right? And we'll see how it plays out. So like I always tell you guys, be patient with your trades, be cautious with the market, but don't miss opportunities. You see how we did it this week. We've already positioned. We had to make a little adjustment on our CLDR trade because we had that earnings report that kind of beat it up a little bit. But other than that, all the trades are looking great. And we just did a quick adjustment on CLDR. And guess what? Everything will be okay. Be patient, be logical, be very, very firm. Make sure you got your technicals down and follow them. Don't let emotion eat you up. This is a market that emotion is your number one enemy right now. When you turn on CNBC and they're pounding tables and they're saying, screaming, sell, sell, sell right here. And now over here, they're telling you to buy. What's wrong with that picture, right? Don't be that trader. Don't chase blinky lights. Don't chase ambulances. All right. So look, gang, you guys have a fantastic weekend. Okay. Sorry we couldn't do a live one today, but we had the technical problems yesterday with YouTube and their live. So we didn't want to close out the week without a show. So we just recorded one and put it up. You put your comments down below and we'll be sure to respond to them. You know how much we love to hear from you guys. Other than that, you guys have a fantastic weekend. The NCAA basketball, March Madness has started for you sports fans. In Hawaii, the weather's cleared up quite a bit. So we're excited about that, surf and sun. And wherever you are, you find and make the best of your weekend. Okay, gang? We'll see you guys Monday after the market.